Welcome to Daily Digests for Monday, August 3rd, 2026. Market volatility is surging as institutional short sellers challenge Friday's relief rally. Michael Burry added significantly to his Nvidia 2026 put options and Micron short positions today, warning that Friday's post-earnings bounce is setting up a classic market trap. Tactical positioning shows retail margin debt hovering at multi-year highs after an aggressive 3-year surge. As market commentators warn of a classic trap rally script, short-term buyers face heightened liquidation risk if key technical support levels on the S&P 500 and NASDAQ are tested. However, fundamental evidence from corporate earnings tells a dramatically different story. Palantir released extraordinary Q2 financial results after the close today, reporting total revenue of $1.935 billion, a 93% year-over-year surge that crushed consensus estimates. Palantir's adjusted earnings per share reached 41 cents, well above Wall Street targets. Palantir's U.S. commercial revenue skyrocketed 149% year-over-year to $764 million, with commercial deal value expanding 153%. This accelerating commercial adoption demonstrates that enterprise clients are converting AI token deployments and AI bootcamps directly into measurable software revenue. Combined with high operating margins, Palantir's Rule of 40 score reached a record 155%. Management raised full-year 2026 revenue guidance to $8.16 billion and projected U.S. commercial growth of at least 134%, establishing Palantir as the benchmark for high-margin software monetization. In broader macroeconomic data released this morning, the U.S. ISM Manufacturing Index climbed to 55.6 for July, marking its 7th consecutive month of expansion and its highest level since May 2022. Employment entered expansion territory for the first time in 33 months. On Federal Reserve policy, Chair Kevin Warsh has formally proposed reducing FOMC rate-setting meetings from 8 to 6 per year, shifting 2 meetings to broader economic consultations. If adopted, this would mark the most significant operational change for the central bank in 45 years. By reducing meeting frequency and stepping back from explicit forward guidance, the Fed intends to let market forces set yields. However, sparser policy dates mean that each individual rate decision will carry larger market impact, increasing bond and currency market volatility. Complementing Warsh's proposal, Federal Reserve Bank of New York President John Williams stated today that current monetary policy remains appropriate, emphasizing that the central bank is in no rush to adjust interest rates before inspecting upcoming labor market data. In real estate regulation, the federal reclassification of cannabis to Schedule III unlocks Section 280E tax deductions for licensed operators. This structural tax relief improves tenant credit quality and rent coverage for specialized net lease REITs like New Lake Capital Partners. Across income, assets, valuation disconnects are creating yield opportunities. Ares Capital is trading below 1.0x tangible book value with a 10% dividend yield, while Vici Properties trades at its lowest valuation multiple in 5 years with a 6.8% yield. In energy infrastructure, Energy Transfer generated $2.38 in distributable cash flow per unit against a $1.34 annual dividend payout. This almost 2-to-1 cash flow coverage provides strong distribution safety despite broader energy commodity swings. In summary, as 10-year Treasury yields hold near 4.7%, market performance is being driven by Michael Burry's short positioning warnings, Palantir's enterprise software blowout, and Fed policy reforms. All eyes now turn to Friday's August 7th employment report. Thanks for watching, and we'll see you next time.